Most investors shop properties, and smart investors shop financing first. And many commercial real estate investors spend months searching for the perfect property before ever speaking with a lender. Now, unfortunately, that's often backwards. And the most successful commercial real estate investors understand that financing is not simply a step in the acquisition process, it's really part of the investment strategy itself. So before evaluating cap rates and tenant mixes or development opportunities, smart investors determine what financing options are available and how much purchasing power they actually have. And in today's lending environment, financing strategy should come before property selection. Why financing matters more than ever. And commercial lending has become increasingly specialized, and different lenders have different appetites, say for multifamily properties or office buildings or industrial facilities or retail centers or self-storage or mobile home parks or hotels or medical properties or mixed-use projects. And a property that looks like a fantastic investment may end up being difficult to finance, while another property with similar economics could attract multiple lenders competing for the same loan. And understanding financing options first allows investors to focus only on properties that do actually fit their capital strategy. So, the hidden cost of shopping for properties first. And when investors begin property hunting without financing guidance, several problems often emerge as part of the process. Problem number one, falling in love with an unfinanceable deal. And many investors identify a property only discover that there are certain loan to value limitations or insufficient debt service coverage or property condition issues or sponsorship requirements or liquidity requirements that end up making it not work for them. And then the result is just wasted time and missed opportunities. Problem number two, losing competitive advantage. And commercial sellers prefer buyers who can close. And investors who already understand their financing options will be able to submit stronger offers and move faster through due diligence, but also negotiate with confidence and close more predictably. And speed often wins deals. Problem number three, leaving money on the table. And without financing guidance, investors may unknowingly pursue assets that require excessive equity. And a better financing structure could potentially reduce the amount of cash required to invest, or improve your cash on cash return, or increase your leverage with safety, or preserve liquidity for future acquisitions. And financing determines buying power, and smart investors will ask, how much can I borrow, or what loan programs fit my goals, or what debt service coverage ratio is required, or how much cash will I need, or which property types are most financeable today. And once we've answered all these questions for you, property selection often becomes far more efficient. So instead of chasing every opportunity, investors focus on deals that align with their capital stack and win more. The advantage of accessing hundreds of lenders at the point of a button. Historically, investors had to contact lenders individually, and that process was time-consuming, inefficient, and unpredictable. And in today's technology-driven commercial lending platform era, we've changed that process. And CommLoan's marketplace technology provides access to more than 700 lenders and thousands of commercial loan programs, which helps investors identify potential financing solutions before making offers. And the platform can evaluate multiple lender types, including banks, credit unions, life insurance companies, debt funds, SBA lenders, agency lenders, and private capital sources. And this allows investors to understand financing possibilities before spending significant time sourcing properties that may not be a fit. Property types matter, and not all commercial properties receive the same lender interest. And many lenders actively compete for multifamily, industrial, self-storage, medical office, and grocery-anchored retail. And other property types may require more specialized financing. And knowing lender preferences before you're shopping will allow you and your investors to focus on opportunities where financing is most competitive. So let's lay out the smart investor process. And step one is to establish a financing strategy. And there we're going to determine your budget and your down payment and your liquidity and your financing options, but also your risk tolerance. Step number 2 is get pre-qualified. And this will help you understand your maximum loan amount and your estimated interest rates and the available loan programs and potential lender matches. Step number 3 is identify target property types and focus on assets that align with your financing objectives. Step number 4, shop your properties only after financing problems are completely established. Step number 5, move quickly when opportunities appear. And prepared investors can close faster and negotiate from a position of strength, is the point. So, final thoughts for the day. The most successful commercial real estate investors do not start searching on LoopNet or driving neighborhoods without understanding their financing. They start by understanding their capital. And financing impacts your leverage, your returns, your risk, your liquidity, and your acquisition strategy. And the investors who win consistently are the ones who know exactly what financing options are available before they begin shopping for properties. And in commercial real estate, financing isn't the last step. It should be the first step. Hi, my name is Bill Rapp. I'm with the CommLoan and Power Program. And I can help you and commercial real estate investors, business owners, and developers access financing solutions through CommLoan's nationwide lending marketplace. My phone number is 281-222-0433, and you can visit my website, billrapp.comloan.com. That'll allow you to start a pricing quote and also schedule a consultation so we can have a conversation about your needs. Thank you for watching. Hope you have a good day.